Yeah, this week we got Prime deals, Walmart deals, Target deals. Where else you got deals? What about real estate deals? Are there any real estate deals to be had in Southern California? We're going to let you know in the Southern California Housing Market Report. And away we go. I hope you got your seatbelt on. Things are about to get crazy for Southern California numbers. So remember, we're looking at properties sold. We're looking at properties that go under contract in escrow. So that's buyer demand. They're out there writing offers and getting those properties tied up. Then we have new listings, that is seller supply, gets added to the existing listings, and we'll take a look at the Altos research report so you can see all the listings. This is specifically new listings, and we have September's going all the way back to 2018. Why are we going back to 2018? Well, 2018, 2019, more normal years, 2020 through 2022, not normal years, 2023, 2024, theoretically getting back to more normal years, and that's why we're going to look at the numbers right now. Year over year, we have an increase in the number of new listings, and we have an increase in the number of properties going under contract, and we are lower on the number of sold. So looking at inventory, we can see we don't have a huge increase in inventory. We're nowhere near normal years, 2018, 2019, where it would have been around 3,000. And we're not at normal years for number of properties under contract. That would have been over 2,000, but we're coming back. And this gap between the new listings and pending sales tells you a little bit about what it's like if you're out there shopping, and what that shows is that inventory is still tight for buyers out there looking. Not as tight as 2021, where we had fewer listings than we had properties going under contract. So that was a twist there. That was a crazy, crazy time to be a buyer, but it's still a tight time to be a buyer, not a big flood of inventory in Orange County. Moving into Los Angeles, look at that. Over 8,000 properties typically listed, and we're now at 6,000. So we're up higher than we were in 2022. And pending sales are up year over year and higher than where they were in 2022. Slightly larger gap than we see in 2022 and 2023 between new listings and pending sales, but not crazy gap. Not like 2018, a normal time of year. Now, things did get crazy in 2018. If you've been watching these, you know what happened in November of 2018. I won't spoil it. Just tune in for the report we do where we cover the November of 2018 numbers. Riverside, and again, we see an increase year over year in new listings and pending sales. So things are increasing. September, we started to see a slight drop, and things were looking optimistic for mortgage interest rates, and it looked like we were going to get that cut that we got. Of course, things have completely changed, and we're back at crazy high mortgage interest rates. Not crazy high, we're not over 7, but it's not like they're trending down right now. So we can see here for San Bernardino, inventory is still pretty tight. Don't have a big increase year over year like we saw in some of the other counties, and pretty flat for pending sales. So you can see that there isn't a big change in what the market looks like in San Bernardino from an inventory or number of properties going under contract standpoint. Pretty flat year over year. Ventura is up for inventory and up for number of properties going under contract. That is news in Ventura. If you've been watching these, you've seen that Ventura number of pending sales has continued to drop and just continue to go down, unlike any of the other counties, and now they rallied back. So things were looking up in September for Ventura. San Diego, year over year, up for new listings, also up for pending sales. We actually have more pending sales in the past 2 years, but our inventory isn't what it was like in 2022, the new listings. So this is a tighter gap here in 2024 than we had in 2022. Not as tight as these crazy years you could see here. That got very tight in 2021 between new listings and pending sales. But this is still very much a seller's market, even with these crazy prices, low affordability, still a seller's market in San Diego. Multifamily, everything on the MLS, 2 units or larger, and we can see that inventory, for the most part, in Orange County has been steady, other than 2021 and 2022 when new listings dropped. Look at that huge spike in the number of properties going under contract in 2021. It was easy to make a property pencil in 2021. When you had such low mortgage interest rates, and when you add up the income and you subtract all the expenses against that, and then subtract the debt service, what's left over is the cash flow. It's pretty easy to cash flow back then. Not so much anymore with interest rates where they are, but we still see properties going under contract. We're up for the number of properties going under contract, higher than 2022 and 2023, approaching normal years for number of properties under contract. Los Angeles, we're seeing an increase in number of properties going under contract, increase in the amount of inventory, but not through the roof. Look at all that inventory in 2020. And these years here, 2020, 2021, we had the moratoria in place for eviction. So if renters weren't paying, there was nothing that could be done. But properties are still trading. People were buying them and selling them. Riverside, more affordable market for investors. For buyers, tends to be a slightly higher cap rate market. And inventory is up slightly, not anywhere near normal years, but pending sales are down. We've seen this pattern occasionally since we're doing these once or twice a month. And I'm always surprised because I'd be thinking investors are taking their money out there, and then a month or two is off, but then it rallies back. So nothing scary in these numbers for Riverside. San Bernardino, usually San Bernardino and Riverside tend to follow a similar path on pending sales, but that's not the case here. Pending sales are up, inventory up, closer to normal levels for San Bernardino County. Ventura, always all over the place. Not as many buildings there. Look at how many went under contract in 2021. Crazy days back there. Again, with the mortgage interest rates where they were, cash flow was not as tough of a thing. San Diego, increase higher in inventory, but much higher than the past 2 years in the number of pending sales. So investors more confident, investors in general in Southern California, writing offers on properties. And that's even with interest rates where they are. This is a tough cash flow environment, but investors are still shopping and making deals. Diving into the median home price madness, and we can see that things are flat or going down month over month for the median home price. Is this anything to be alarmed about? Well, no. Typically this time of year, that is what we see, is the median home price will drop as we get into the holiday season. And then in spring, it'll shoot back up again as everybody's out there buying and selling. Now, the year over year changes, OC, we have a 7.2% year over year change in median home price. LA is 2.3%, Riverside is 4.3%. So still in positive territory. 2s, 3s, and 4s are more normal numbers. 7 is still pretty high. But when you factor in inflation, which is normally 2 or 3%, and we can see LA, the value has gone up 2.3% year over year. It's actually, if you look at inflation adjusted dollars, that's a reduction in price. It is entirely possible that we'll get into negative year over year value territory. At the times we saw the big increases of value as interest rates continued to go up, we saw some drops here. Year over year, we had negative numbers, and then those rallied back to positive numbers. But of course, you know that because you've been watching every single one of these, right? If you're digging our data, you're our kind of people. Make sure you reach out below before you think of buying or selling real estate. And our other 3 in SoCal, and we actually have an increase in San Diego month over month, but a big drop in Ventura and a drop in San Bernardino. Again, more normal, what we expect. Year over year, San Bernardino 1.5%, Ventura 2.3%, San Diego 3.8%. So again, lower expected numbers, but if you do inflation adjust these would actually potentially be negative. And then the thing to bear in mind is we may get into a negative year over year territory. It just is going to depend on what happens with mortgage interest rates and whether those drop enough to spur activity out there, but they went up again, and it is such a roller coaster ride. You know I love these, and I know you love these. It's time for the Altos research reports. We're going to be taking a look at inventory levels because we're seeing a tale of very different markets depending on where you're looking. Now we're going to look at the national level, and here we are looking at the national level. We can see that inventory has increased. In fact, the inventory at this point in time is higher at the national level than it has been unless you go all the way back to 2019, the last normal time we actually had more inventory at that point in time. Now, the other important thing to look at are the quartiles. And we do see that the new versus absorbed in every case, in every one of these quartiles here, we have more inventory being absorbed than new inventory. So that's just making this level off a little bit and not spike. Again, you need to look locally to see what's going on. So here's Orange County. And you can also subscribe to these, and you can go ahead and look at the local city or zip code level to see what's going on in your particular area. So inventory, we can see that in Orange County, we're not at a record. We actually had more inventory at this point in time in 2022, pretty close to 2020, and definitely far off from where we were in 2019. Looks to be around half of where we were. So inventory is down compared to some other years, and it is flattening, is leveling off. So this means that we don't have a big increase. This is a normalization of inventory, and it should be. If you look at these dots at what happens, and these dots are year over year, typically what happens is, well, inventory goes down. Look at that huge drop we have here. And it's as we get into the holidays, inventory drops. So we should expect to see this happening here, and we have to keep watching to make sure inventory continues in the downward pattern for that time of year. Looking at the different quartiles, we can see that the absorbed exceeds the new numbers. Again, we're not going to see that all throughout Southern California, and it's going to affect this inventory line. What do you think how that compares to the national levels? This is why you're going to have different stories depending on where you're looking. So here we are in Los Angeles. Inventory did spike, and this is actually higher, pretty close to where it was, but slightly higher than in 2022, and actually not too terribly far off from 2019, a more normal market. Now again, our quartiles, we see in every case that more was absorbed than new inventory came. But look at days on market. The top quartile, 94 days. That's a long time. We haven't seen that long of a time in a while. Riverside, we can see it started to level off, and then it spiked. And here we are at a higher level than we've been years past, other than 2019. And it can do that. You could see that in 2022 it spiked a little bit, but this is a much sharper curve up. And what is happening in the different quartiles? Well, we can see that in the middle here, 156 new properties in this third highest price quartile, only 132 absorbed, 145 in the next lowest quartile, 133 absorbed, bottom quartile, 130 new, 122 absorbed. So that's why we're seeing this big spike here. Properties aren't being absorbed as fast as they're coming. So this isn't following its typical trend line. This looks like it's going to continue to spike unless we see more demand, so more buyers come out and start to absorb this inventory, or we see sellers deciding not to sell and we see a slowdown in the inventories, in the supply. So this is definitely a tale of a different market, and we have to track and see what happens in Riverside. San Bernardino, another one where we're seeing an increase. We're at a higher level than we've had years past at this point in time. Should be leveling off. We can see that things dropped and then went right back up. And our quartiles, similar tale. 84 absorbed at the highest, 87 new ones, 97 absorbed, 120. The top half of the market in San Bernardino is slowing down and inventory is starting to build. The bottom half, 91 and 91. And then the very bottom, we had 108 versus 101. So still long times on market, 77 days, 63 days. So the bottom half of the market appears to be slowing. The top half has definitely slowed for buyer demand. So got to watch what happens with inventory here in San Bernardino. Ventura, look at you. You're behaving. You're not acting as crazy as you always do. Inventory about the same as 2022, 2020. And the new versus absorbed, we do have fewer absorbed in the third quartile, but things are still moving. For example, you see the bottom of the price point here, 21 days. Things are moving at the very bottom. So that's why we're seeing inventory drop in Ventura, and of course continue to track it, see, because things could change. But it looks like Ventura is finally behaving itself and acting like a normal market, where before it was just dropping and crazy things going on. Finally, San Diego, level off of inventory, and that's typically what happens this time of year. Last year it actually increased a little bit, and our inventory is slightly lower than 2022. As far as new versus absorbed, all four quartiles moving. Not crazy fast, but they're moving. So San Diego, like Orange County, those markets are continuing to move, and some aren't. Riverside in particular, it's at an inflection point for inventory. So we have to see what happens going into the fourth quarter here. And who knows with mortgage interest rates what the heck's going to happen. As you can see in the data, in Riverside, we're starting to see an increase in inventory. And in certain quartiles, we're seeing longer days on market and also seeing where more inventory is coming than being absorbed. You have to keep tracking to see, but there may be a deal or two to be had by a savvy buyer who finds the right seller at the right time. So if you're thinking of buying, get out there and write offers and see what you can tie up. What are you seeing out there in the market? Let us know in the comments below. Subscribe to our free weekly email newsletter so we can send updates like this to you directly every Sunday. Thanks for tuning in. This has been Christian Walsh, real estate agent with Wire Associates, and we can't wait to hear from you. The next thing you need to know is in one of these videos right here.